Hi, Brock VandenBerg, Fund Manager for TaliMar Income Fund I. I'm excited to announce that we've wrapped up the July financials for the fund, and the annualized return for the month was 9.17%, bringing our year-to-date return to 9.53%. That represents a half percentage point above our target return of 9%. The fund also surpassed 300 individual investors with a total balance of $83.45 million in invested capital. I'm also happy to note that we reduced loan defaults to one loan, representing less than 0.5% of the loan portfolio. One important announcement that I want to make is that we've been approved for an increase in the credit line from $5 million to $10 million. The reason for the increase is that as the fund grows, so do our daily capital requirements. We use the credit line as a tool to help balance the inflow and outflow of capital. But as you may already know, we take a very conservative approach to utilizing our credit line and only drawing from it if needed to fund a new loan or construction draw. As soon as a loan pays off or new investor capital is added to the fund, we use those funds to pay down the balance. Many of you have already been asking, what will the impact of the Fed lowering rates have on the return of the fund? The answer is it really depends. The return of the fund is not necessarily tied to the Fed funds rate, but rather how much capital is competing with us to fund the loans that we target. Currently, we're seeing a significant inflow of new capital into our space, which has had some impact on our ability to push the rates that we charge. Because some of the competing capital providers do heavily borrow for their operations, as rates drop, so do the rates that they charge. However, as mentioned earlier, we have seen a negligible impact thus far. Some other good news, our deal flow remains at record highs, allowing us to be highly selective on the loans we're funding. When considering a loan request, we focus on property type, borrower experience and credit, loan to value, repayment strategy, and obviously pricing. Our target market remains Southern California and primarily residential single family and multifamily. We're actively raising additional capital for the fund and can deploy those funds immediately. If you have not invested, we can quickly process your investment in about 5 business days. Additionally, we accept non-retirement and retirement funds. And remember, we're approved on the Schwab and Fidelity platform and most self-directed IRA platforms. For those already invested, you can add to your existing investment in increments of $1,000. For more information on the fund, please go to our website to obtain a copy of the executive summary, which can be found under the Invest tab, or reach out to my investor relations team. For those already invested, you can go to the website and select the Submit Investment Request tab under the Invest drop-down menu. And lastly, if you've not already, remember to sign up for our Investor Insights magazine, where we share interesting articles about the industry, our investors and borrowers, and key performance indicators for the fund. You can go under the Invest tab on the website and select Investor Insights Sign Up. If you're already invested, you've been automatically signed up. Thank you for listening, and feel free to reach out with any questions. And remember to like this video and subscribe to our YouTube channel, where we share a ton of great content. Thanks for listening.